Hi, everyone. My name is Lucas Hall. I'm with Cozy and Landlordology. And thank you so much for taking time out of your night to attend this webinar. We have a packed house and people are still rolling in. So this is a free webinar. It's on tax deductions for landlords and other really helpful tax tips that you need to know as a landlord, whether you're getting started or whether you have decades of experience. I think everyone is interested in saving money on their taxes and not having to pay the government as much. And so real estate and rental properties are an awesome way to do that. So that's what we're talking about. Who am I? Why are you here? Do you know me? Do you not know me? I'm Lucas Hall. I'm the head of industry relations at Cozy, and I'm a landlord of over 11 years. I have about 20 tenants at any given time. 5 rental properties in 3 states, and I also founded a little website called Landlordology. So if you're familiar with that, great. It's good to see you again. It's just an amazing educational tool that's out there that can teach you how to be a landlord. Next, we have Maggie Cooper, who is here assisting us. Maggie, why don't you introduce yourself?
All right. Hi, everyone. My name is Maggie Cooper, and I'm head of customer success at Cozy. So I work primarily with Cozy's new customers to help them get started with the tool. I'm also in Portland, Oregon, and I'm actually a Cozy landlord myself. I have 2 rental units, and I love Cozy. I love it for rent collection. We have awesome maintenance requests and expense tracking tools. So I'm a big fan and really excited to help out with questions today. Thanks, Lucas.
Awesome, thanks. If you sign up for Cozy, you will receive an email from Maggie very soon after, and she's just asking if there's anything she can do to help. And she gives out demos once a week, which are just amazing. So it's a really easy way to get started. Next, we have Jordan Bradley. Jordan.
Hey, everyone. I'm Jordan from the support team here at Cozy. I'm originally from LA, now living in Portland here for a few years, so I think I'm officially a Portlander. I've pretty much been a tenant for most of my adult life, so questions and concerns about renting or expense tracking, anything like that are things that are really important to me. So I'm really happy to see that we have a full house today. I'm really excited to learn some things that perhaps I didn't know. And if you have any questions, I'm going to be super happy to help out with those. So welcome, and let's get going.
Okay, thanks, Jordan. I have my all-star team here. So we are all from Cozy. So if you didn't get that the first time, we are all from Cozy. Cozy is modern property management software, and we all use it. So both Maggie and I are landlords. We both separately manage our own properties, and we do it in Cozy. And it's really, for me, I mean, I've been doing it for multiple years with Cozy. It has just streamlined my business drastically. And I rarely ever think about landlording anymore. I mean, a lot of it's just handled with Cozy. And then I just need to get involved when I'm actually doing the people relations stuff, talking to tenants and managing contractors and such. So anyway, amazing. We'll tell you a little bit about more, but mainly this is about taxes. Cozy is huge, so you're in good company if you already are a Cozy user or Cozy landlord. There are over 200,000 Cozy landlords in the United States managing properties with about 520,000 renters. Using Cozy to pay rent, turn in screening reports, send out applications, etc. And then, it's not chump change. We do process about over $1 billion in rent every year, and that's growing incrementally. So we are receiving about 10,000 new landlord signups a month, which is just really impressive. So it's designed for the small asset landlords. So somebody with 1 to 20 properties can use Cozy with incredible ease, but if you have hundreds of properties, it'll work just as fine too. So certainly check it out. The things that we do here at Cozy are really 6 main things now, and it's growing. Seems like every quarter we're adding a new feature. So first and foremost, we help you with marketing and advertising. So you can create a listing, you can share that listing with multiple syndication sites, and then you have a little application. Online application that we give you that has pictures and details about your property, and you can share that with anybody you want or share it online anywhere you want. And then when renters see that, they will apply, and then you can screen them through background checks and credit reports. Then if you find a tenant that is going to work well for you and qualifies, then you can roll them right into online rent collection. And personally, as a landlord, when I tell potential applicants that, like, hey, if you rent my place, you can pay your rent online just like you do everything else, like, you should just see their face, because oftentimes rent is the only check that they make or they write out every single month. It's the last thing that they have their checkbook for. So The fact that they can do that online through Cozy with me just makes my property that much more appealing. And then again, expense tracking, which is kind of what we're going to talk about tonight. Maintenance tracking, so they can submit maintenance requests. You can review those requests. You can talk to the tenants, all the tenants on that lease, and coordinate repairs. And then lastly, education. So we teach you how to be better. We teach you through things like this webinar, and we teach you through definitive guides and other mechanisms. So the main platform we have for that is called Landlordology, and that's the site that I founded and I mentioned earlier. I hang out on that site every single day, helping and moderating and posting. And so if you want to learn more about how to be a better, more profitable, ethical landlord, go check it out. It is completely free. And also, Cozy is completely free, so check that out too. We do make money, so that is going to be a question that people bring up. I know if I don't say it, we do make money. So we do charge the tenant or the renter or the applicant for a background check and a credit report if you require one. So if you want one, the tenant pays for it. And then we have a couple other smaller areas where we make money. But as a whole, the core features are completely free. You can collect rent online. They don't have to pay for that. You don't have to pay for that. You get the screening reports for free or at no cost to you. You can do listings for free, expense tracking and maintenance tracking, and all the core features. So certainly check it out. Now let's get on to the main presentation. So we're here to talk about tax deductions for landlords, mainly expenses, capital expenses, current expenses. Like, what are they? What does that mean? If you're a new landlord, just take lots of notes. If you're an experienced landlord, I hope that you learn something. So we're going to talk about not only what the different types are, but we're going to go through about 15 different categories of expenses. So before I proceed, it is super important that I cover this. So I am not a lawyer. I am not a certified public accountant, and I'm not a tax advisor. So I am not giving legal or tax advice in any possible way. If you have a legal question, like, is it legal for me to deduct my blah, blah, blah on my taxes, then I can't answer that because that would imply I'm giving legal advice. So ask your questions, but again, I can't give legal advice. And if you want legal help, go check out your state bar association, and they have a find a lawyer or referral service that's completely free, and they'll hook you up with a lawyer that matches whatever you're trying to do. All state bar associations do that. It's a service they provide. If you don't want to pay for a lawyer, you can go find a legal aid provider in your state. So oftentimes the state will fund free legal aid service centers, and you can go get help with landlord related things from those providers. If you want to find out where you can find that information, go to our state laws page, which if I go back up here on this, on the homepage of Landlordology, on the very top, it says state laws in the navigation. Go check that out. We have almost all the states outlined and provide some additional links to these various legal resources. It's landlordology.com/state-laws. So let's go back to the basics. Let's lay a foundation for this conversation. What is an expense? Really, what is it, right? Okay, so there are two types of expenses when it comes to deductions and taxes. One is current expenses versus capital expenses. So these two terms are going to be thrown around a lot today, and they're also going to be thrown around by your tax advisor and whoever else you're talking to when you're doing your taxes. So a current expense is something that has a short-term benefit or short-term value. So something that typically restores something to its original value. So a classic scenario is the sink is leaking and you hire a plumber to restore the sink to when it didn't leak. That's a current expense, right? It has a short-term value. It's just fixing something. Capital expenses are bigger expenditures that oftentimes have longer lasting value or actually increase the value of the property itself. So when you have a new roof that you put on, you're not just fixing the roof, even though the roof might have had a leak in it, you're kind of fixing that at the same time. But now you have a new roof that's going to last 15 to 20 years. So you're extending the life of the roof from maybe only 1 or 2 more years left to now 20 years left. And it's actually something that has long-term value and is beneficial for a potential buyer of your home, knowing that there's a new roof put on. So we'll get into more of this too, but it's important to know the difference. Now, the reason why there's two different categories is, one, current expenses is something that you can actually depreciate right away. So those are operating expenses and basic repairs, like I mentioned, fixing the sink, or just buying a new doorknob or something like that. Now, those are basic repairs. They're usually not that expensive. They keep the property in working condition. So, you know, if you didn't fix that doorknob, they wouldn't be able to use the front door. That's kind of a big deal. They do have short-term benefits, and the entire expense can be deducted in that year. So if you spend $100 at Lowe's on a new doorknob, you can expense $100 on your taxes, and therefore you don't have to pay, you know, taxes on those. It reduces your taxable income by that $100 is the easiest way to say it. Also, here are the rules from the IRS webpage, right? So this is how the IRS defines current expenses or operating expenses. One, it has to be ordinary. Well, what does that mean, right? Ordinary is commonly accepted in your trade or business. Like, it's common to hire a plumber to fix a sink in a rental property, or it's common to buy a new doorknob. What might not be common is to put a giant Ferris wheel in your front yard. Like, that might not be so pertinent or common or ordinary to a rental property. Is it necessary? You know, do you have to pay taxes? Well, yes. Do you have to maintain the property? Well, yes. You know, do you have to make sure that it's safe and secure? Well, yes. So those are necessary things that you need to do by either by law or by statute, and you just need to take care of them. So it's necessary. Is it current? So I know we're talking about current expenses, but is it current? Like, does it have a short-term value that's an immediate fix? So for example, if the hot water heater is not working, yeah, okay, you're going to get an immediate return on that when you fix it, right? It's going to restore it to its original value, right? You're just going to make it work, and it's right then and there. So yeah, you can deduct the whole thing right away. And then, is it reasonable? So that's a big one. That's a really big one. So it has to be reasonable. And what I often think of is that it's not too expensive. So, you know, there's no set line, meaning like any expense you have over $1,000 is going to be a capital expense versus under $1,000. There's nothing like that in the IRS rulebook that I can find. But I tend to think like maybe somewhere between $500 and $1,000 is kind of like the gray area where it starts to become a capital expense, because those things that are more expensive typically have more value. That's not to say that a water heater, you know, fixing a water heater is not going to cost you $1,000. I don't know, but at that point you might just buy a new one. So an example is back in the 80s. You know, back in the 80s. Well, before I get there, so the key here on this slide is just that it must be business related, point blank. You know, if you're doing something that's not really related to the rental business, even if it is at your rental property, then that could get you in trouble. For example, the thing that I like to quote is, and I don't know how much truth is in this, but back in the 80s, the Pentagon was, you know, cited for paying about $640 for a toilet seat. You know, and it was just a frivolous use of funds. I don't actually know if it's true. It could be a myth that's out there, an urban legend, but, you know, or $700 for a hammer or something like that. But, you know, there's more to it than what we understand. However, the point is, if you decide to expense $500 for a toilet seat, you will get audited. It just doesn't add up, right? So make sure that when you buy a toilet seat that it's a reasonable fee or reasonable price. I mean, if you're doing extra stuff like, you know, they're going to think you're doing other things than the $500, which is probably true. Okay, moving on. Capital expenses. What are capital expenses? You know, we just talked about short-term current expenses. Well, capital expenses are things that add value. They're improvements to, or assets. So things like things that add a long-term benefit. The example I gave earlier was a roof, right? If you put a brand new roof on a house, that's going to add another 20 years of life to the property, or I should say to that roof, and it certainly has a long-term benefit. It extends the life of the item. For example, if you replace all the windows, then all your windows now have a brand new lifespan. Bigger ticket items are generally capital expenses. There's no like line in the sand or a list of what is and what isn't, but generally big things like roofs, appliances, you know, fridges, dishwashers, dryers and washers, pools. If you put a pool in, that might be a decent rental expense, but you can't take it all in one year. And then they have to be depreciated over multiple years. So capital expenses, that's the big thing here, is like if you spend $10,000 on a Sub-Zero fridge, then they're not going to want to let you expense that all in 1 year because it's going to create havoc on your actual taxes. So you have to depreciate it over multiple years. Sometimes it's 5, sometimes it's 27.5. You have to look at the IRS charts for that. Now let's talk about some real life scenarios. So I actually have a little chart, after I said there weren't charts, but we have one made up that that talks about real life scenarios of repairs versus improvements. So you could also read that as current versus capital expenses. So an example of a repair would be you repair a cracked foundation, but an improvement would be you decide to lay a new foundation. Or you repair a broken AC fan, but then the improvement version of that is that you just replace the AC unit altogether, or you install or add new air conditioning. Let's say you have a security camera and you break one, you could replace one and that would be a repair. But if you install a new security system, that would be an improvement, right? Because everything's new. If you're just replacing one part, then it's a fix. If you're replacing the whole thing, it's a capital improvement. But the list goes on, and this is actually a webpage on Landlordology. So you could go to Landlordology and type in taxes, and this will come up, or search for taxes, I should say, because there's a couple articles. But things like general painting can actually be a repair. So painting can be expensive, but if you're repairing it to restore it back to the condition it was when your tenants moved in, that could be a repair. But if you build a new addition and you paint it, that would be an improvement. I've had lots of appliances break. If I just buy the part, or if they fix the part, that's a repair, versus if I buy a new one, then that is an improvement. So a lot of times people think like, oh, I had to replace a hot water heater because it died. Like they think that's a repair because they didn't have any water, right? They're fixing the water problem. Well, yeah, that's true, but it's still an improvement because it's a brand new water heater. So I hope that makes sense. I'm not going to go through all of them, but there's a decent list here. This is a little thing called repairs versus improvements. What can I deduct from my taxes? So hope you're all with me here. Let's continue on. So now I want to move forward to a list. I love lists. Honestly, it's like I wish books were written as lists, all of them, because it just is the fastest way to absorb information. So let's talk about the top 15 ways, or top 15 tax deductions, meaning ways that you can actually reduce your taxable income on your 1099 Schedule E. So first, number one, loan interest or points. So I just want to define this real quick. So generally, loan interest is if you have a rental property and you have a mortgage on it, you're paying interest on that loan. So you either pay interest through a monthly fee, or you pay, as part of your payment, or you have points, which you are prepaying interest when you refinance or when you first get the property. So if nobody knows what a point is, it's just usually a 1% of the purchase price that you pay up front when you get the loan. So it can be first or secondary loans, third loans even, and the interest is something that your mortgage company will send you a special form at the end of the tax year, which you should be receiving right about this week, actually, saying, here's what you paid. So it's real easy. It's all documented for you. HELOCs are great because HELOC is a home equity line of credit, and it's basically like a giant credit card. And you can use that interest and borrow from on your house to build additions or do other things that are used for repairs and improvements. And sure enough, that has a lot of interest, and so you can deduct that interest. Ironically, you can use a credit card to make repairs, and you can deduct the interest on that credit card. If you had to pay American Express $200 last year in interest, you can deduct that, especially if, or only if, that was used for your rental property, like if those repairs and that interest related to that was for, repairs on your rental property. I don't like credit cards, generally speaking, so I think there's better ways to do that, like paying cash. But if you do it, you can deduct it. And I mentioned points earlier, so that's great. Number two, depreciation. This is probably one of the most least understood sections of the tax code from a layman's term. Number one, the value of the structure itself can be depreciated, not the land. So meaning the idea is that land never loses value, ever, but the structure might. And so if the idea that the structure itself, the dwelling itself, is actually made of 2x4s and cinder blocks and concrete and glue and other things. And over time, those things wear out. And so it's the idea that you are losing those things as time goes on. Now, in reality, real estate should go up in value, and the thing as a whole will increase in value, but the pieces of that whole typically go down in value because, you know, 2x4 that's 20 years old may not be as valuable or as secure or safe as a 2x4 that's you know, currently that you buy today. But it's tricky. So I know that's complicated, but anyway, that's the gist of it. You can depreciate the structure, which is the house. So when you go look at your tax code, or when you go look at your property tax statement, so all of you should get that from the county, and sometimes they do it online. So you can go look it up and look up your address and see how much you're going to pay in taxes that year. Well, in that, they have two columns typically. One is like the value of the land, and one of them is the value of the structure, and then they tell you what the total value is together. That's why they split it out, because one of them depreciates and one doesn't. So generally speaking, you have to depreciate over a 27.5 year span. So if you buy a house for $100,000, then you have to depreciate that over 27.5 years. I honestly don't know what that comes out to, but it's a flat or straight line depreciation schedule, and there's other ways to do it. So please talk to a tax attorney before you pick a method, but that's the most common. Okay, moving on. That was a long one. Values of improvements also can be depreciated. So if you buy that $10,000 Sub-Zero fridge and you put it in a rental property, which honestly, if you do that, I'll come take it from you because I want it at my house, not my rental property. You can depreciate those. So if you put in a brand new fridge, you have to depreciate that over sometimes, I think it's 5 years for fridges, and you can't claim the full $10,000 on taxes. You only can claim a fifth of that every year until it's fully depreciated. It's the same thing for carpets, windows, countertops, anything that really adds value to the property. And then equipments, computer, laptops, you know, yeah, computers. So if you have a computer for your rental business and that's the only thing it does, then you fully depreciate that. And then business vehicles too, like the actual vehicle itself is expensive. And if you use that only for your rental property, which is not common in single family home situations, but if you have a giant apartment complex and you have a vehicle for the complex and it stays on the complex, then sure, why not? Okay, number 3, taxes. State, county, and city taxes, Social Security taxes for your employees, which are something you have to pay if you run a big property management company and you own your buildings. Medicare taxes and unemployment taxes for employees, personal property tax on that vehicle that you might have for a big apartment complex, and then any other permits or fees or inspection fees, like when the county needs you to register your business and pay taxes on that, then sure, you can do that. These are all taxes that you pay, and then you get to deduct them from your actual income taxes. So I know it sounds weird that you expense taxes for taxes, but that's what it is. Your state, county, and city taxes will typically send you a letter at the end of the year, or sometimes at the beginning of the year, and tell you what your taxes are. Oftentimes your mortgage company will pay those taxes for you and then send you that information as to what you paid in that single document that they send you with the interest. I hope I'm going at a good pace. I'm trying to fly through this because it's a lot of information, and I'm trying to make it entertaining. So hats off for joining us. Thank you. I sat at my desk today thinking, how am I going to make taxes fun? But yeah, we're here. So, okay, so number 4 out of 15, repairs. So this is the most common type of expense. You can deduct from your taxes or taxable income, you can deduct the cost of major repairs or minor repairs for your rental property. And commonly, you know, painting or spot patching, plumbing repairs, like when the sink is dripping, HVAC repairs, which is something I'm doing tomorrow, actually. I have a guy showing up. Fixture repairs like lighting or faucets or things like that. Labor costs, like the plumber or the HVAC guy that actually is going to show up to do that. If there's a labor cost associated with it, which there usually is, then that's a cost I can expense. Incidentals related to a repair. So that's often little parts. Maybe you had to buy them lunch, you know, if they were there overtime or something, you know, any sort of extra things related to it. And then rental fees for tools and equipment. So if I go rent a jackhammer to rip apart a sidewalk, I can expense that. This is not a definitive list, so I should say that you know, you can go online and find a list of 1,000 different things and they're all probably okay. So just general things to keep the place running, right? Now maintenance. Now these are not repairs. Oftentimes they're sort of the same thing, sort of, but maintenance can be a lot of other things. So let me walk through that. So landscaping and tree trimming is a great example of common maintenance, right? I mean, it's something that doesn't ever really get fixed, right? You mow the grass one Saturday and then you're gonna have to mow it again the next Saturday. It's not like you fixed it. HOA fees are common. Most people don't realize that you can deduct those. So if you belong to an HOA or a homeowners association or a condo association and they make you pay your dues, sometimes they're a couple $100s a month, then you can write that off, because those are going towards the maintenance of the general property. So sure, you're paying for lawn mowing. It's just you're not actually paying the landscape guy, but the association is, so you get to write it off. Pool cleanings and chemicals that all go into that. Pest control, which is a big one. Sometimes people think, oh, I had mice, and they came and took care of it, so I got to expense that. But what if you want to have them come back even when there aren't mice, right? Well, that's okay too, because sometimes they need to regularly treat it so they don't come back, right? That, especially with cockroaches, if you've ever had cockroaches, they're persistent little devils. And so if you can, if you get rid of them quickly and then treat it every quarter, then you'll never have a problem again, or hopefully. Tune-ups on things like lawnmowers and making sure the blades are sharp, all that kind of stuff. Light bulbs, big one. Yep, everyone buys light bulbs. Smoke detector batteries, like all this stuff to make sure it runs right, okay? Janitorial items, cleaning supplies, things like that. Number 6, insurance premiums. This is a big one because we all have to pay insurance. Oftentimes we don't, what? No, I shouldn't say that. If your loan to value ratio of your mortgage isn't, or if you have a mortgage, they are going to require you to get insurance. If you don't have a mortgage, then it's a free country. You don't have to insure your property. It would be pretty dumb otherwise to not insure your property, but it's okay. Maybe it's not worth that much. Maybe it's not worth the hassle. But if you have insurance, whatever you pay to insure that rental property, then you can deduct. So, and that's oftentimes big. I mean, I probably pay, let me think about this. I pay close to $8,000 a year on insurance for my properties. Homeowners insurance, mortgage premiums. So if you don't know what those are called MIPs. And if you have to pay the mortgage company a little bit extra if your loan to value ratio isn't strong enough. So if you are paying a mortgage premium, then or mortgage insurance premium, then that'll show up in that form that the mortgage company sends you at the end of the year. So make sure to look for that. Any fire damage, liability insurance, anything that you have on a rental property. Flood insurance riders, which are not typically included in the normal policy, you can add those. Theft insurance, workers' compensation insurance, general liability insurance, all these other things that businesses tend to have, especially rental businesses. And then my personal favorite is personal umbrella insurance. Now, I'm not going to go into fully why that's awesome, but basically it's an umbrella. Like, imagine holding a giant umbrella over you and all of your properties, and you pay maybe about $300 or $400 a year, and you can get like $1 to $2 million worth of coverage. So if one tenant slips and falls and breaks their arm on your stairs at one of your properties, they can't sue you for everything that property is worth plus everything that your other property is worth. Even if you're in an LLC, even if they have different LLCs, like, there are ways around it. So personal liability insurance says, or personal umbrella insurance says, I'm going to cover everything. So even if property number 1 doesn't cover it completely with the insurance, it'll kick in to make sure that your other properties are covered. So it's just extra above and beyond insurance, which is in my opinion, one of the best ways to make sure that your assets are not at risk. Okay, number 7, utilities. You can deduct utilities, commonly electricity, gas, heating oil, water and sewer, trash and recycling, cable, Wi-Fi. Yes, you can definitely deduct that from your taxes if it is something you pay for to conduct your rental business. So if you share a property with one of your tenants, like a duplex, and maybe it's one single cable line, then you can't deduct the entire cable bill. You can only deduct half the cable bill because you're using half of it for personal use. So just keep that in mind. If you're paying all of it, on any of this, then you can deduct it. If your tenants are reimbursing you for any of this, for water and sewer, let's say, then you can't deduct that because you got reimbursed. You actually didn't have an expense. Okay, number 8, travel. So a lot of people don't realize that if you have to travel for your rental property to conduct business in the normal, ordinary, necessary means, then you can deduct those things. Now, there are strict rules around it, so make sure that you do read up on this and do a little searching. But you can deduct airline fares if you're going to conduct business at that place and you need to travel there. That's great for those long distance landlords who might need to show up again. Car rentals and taxis to get to and from your property, any hotel stays that you have, and then oftentimes 50% of any meals that you have during the travel. So, and that's common because you're not working 24 hours a day, so why should you expense all the meals? But anyway, so definitely talk to a tax attorney or a tax specialist if you are going to deduct some big things like airline fares, because that can certainly throw off your numbers if you're paying $900 for a flight. And so make sure that you're within the grounds of what's allowed. All right, number 9, vehicles. I mentioned this briefly, but if you do have an actual business vehicle for your apartment complex, or you have an army of property managers under you, and you own all your properties, then yes, you have these business expenses, these vehicles that you can depreciate. I don't remember what the schedule is, like how many years it actually is to depreciate a vehicle, but it's in the IRS documents. And then most people don't have a business vehicle. Like I certainly don't. I don't know how many properties you would have to have before you actually get a business vehicle, but most people just drive their normal personal vehicle over to their rental property to take care of business. And if that's the case, you can do one of 2 things. Either deduct your mileage, so track your mileage, and they'll give you a flat rate. I think it's like 57 cents on the mile. Don't quote me on that, but I think it's around there. So that's supposed to cover your gas, your maintenance, the wear and tear on your tires, all that other stuff that you're doing to get to your property. Or you can take the other approach where you actually keep track of every gas receipt, every maintenance receipt, every personal everything related to that traveling that you did. So that's really impossible or hard to track. Like, how do you track maintenance on a car, like an oil change, if you travel 30 miles that month for your business, right? It gets a little weird. So it's often recommended, just for simplicity's sake, just take the mileage deduction and keep track of your mileage. Okay, number 10, management fees. This is often known as a property management fee. So if they manage your property for you and you're just the owner and you hire somebody to do it, they'll often charge you like 10% of the rent. You can save all that by using Cozy to do it yourself. But if you do hire a management company, then yes, they will charge you an arm and a leg oftentimes. So the good news is, and the saving grace is, that you can deduct it. If you don't work with a company, but you have like an on-site manager, somebody who might live there, or a neighbor who is providing property management expertise and is qualified to do that, whatever you pay them, you can deduct it. I mentioned on-site manager or condo association fees. So sometimes I mentioned HOA fees. Condos are run a little bit differently, so there may be additional fees associated with that. And then special assessments, mainly you see that with condos. So they may need to put a new roof on, and then all of a sudden they're saying everybody needs to drop a check for $5,000. Well, that stinks, but sure enough, you can deduct that. Okay, legal, actually, let me go back. You would want to talk to a tax attorney too about that if the condo assessment was for a new roof, which is typically a depreciable asset. So good, I saw somebody mention something. So yes, so talk to a tax attorney, but generally special assessments generally are expensible. Okay, legal and professional fees. If you have to talk to somebody to get tax advice or accounting advice, yes. If you actually do tax preparation, like you take your stuff to H&R Block or Jackson Hewitt, like you can write that off. Tax preparation software, which is something I do every year. So I love TurboTax Home and Business Edition. It covers it can do all of my properties and my little self-employment businesses, and I have a little web design business and all this, like and even a salaried employment, it handles all of that. So that's like $80, right? Super great, super useful. Any structural engineering consulting, like if you need a plat marked up or designs drawn, that's cool. Legal fees, lease reviewing and editing. So if you want a lawyer to look at your lease, that's an expense. Or court filing fees when you have to evict somebody. Hopefully you never have to. If you screen great tenants, you might not need to. But if you do, then you can expense any fees related to the court. All right, moving on. Number 12. I hope you're still with me. We're almost at 15 here. Office expenses. Ink and printer paper, obviously, pencils, pens, anything that you need to run your business from an administrative standpoint, you can do. So one other thing that isn't commonly known is if you pay rent for an office and you use that office almost exclusively to or exclusively to manage your business, your rental business, then yes, you can deduct the rent that you pay for that. So that can be a huge amount, and it's really great to know that. If you do have a home office, you can expense the square footage in relation to the rest of the house to for the actual expense. So let's say you have an office that's 10 by 10, so you've got 100 square feet that you could actually write off at a percentage. And tools like TurboTax will help you do that, or an accountant will help you do it. Phone bills related to calling your tenants, that kind of stuff, but you have to be able to itemize it pretty well. Number 3, any sort of advertising that you do. So if you do pay for advertising, which is not, in my opinion, is not necessary in this day and age with all the online tools like Cozy and Zillow and Craigslist and all those out there that are free, you don't need to actually pay for a printed newspaper or even pay for an online ad. And certainly not radio. I have that up there because I heard of one landlord doing it, but I don't know who would pay for that. Signs and banners, like if you do have yard signs, you can certainly expense that. If you're a property management company and you're using ads and phone books to get business, to find tenants, then yeah, sure. Printing and mailing, postage and all that stuff, yep. Okay, commissions. Commonly misunderstood, but oftentimes in the professional real estate world, if you send somebody, or if a salesman comes and helps you actually get that property or helps you do some sort of deal, then they get a commission. You can write that off. And also commissions for referrals. So if a realtor ends up sending you a tenant, and they want you to pay whatever the fee is, then you can write that off for sure. Another example is I will often tell my tenants that I'm doing, I'm starting to show the place, and if you want to help me, I would love it. Please clean the place up. For everybody that I send over to the house, if you'll show the property to them and answer some general questions, then I'll give you $50. If they end up signing a lease, then I'll give you another $100. So it motivates them to actually be involved and speak highly of the place and clean it up. And I do this with tenants that I have a good relationship with and they like the place. I never ask them to lie or anything, but that's a commission, so you could write that off too. All right, number 15. So this is the last one, and it's a biggie. So if you have startup expenses, so what is a startup expense, right? It's anything that would be a normal operating expense before you actually rent it. So almost every landlord, when they buy a new property, is going to have startup expenses, right? There's things you have to do when you get a property before it's rent ready. And those types of things are things that you can write off because it is related to the business. It's not just something that you can do and it has no effect on the business. It's going to have a lasting effect, and that's the key. So if you install a new sink, like that will have a lasting effect, and so they want you, or the IRS actually wants you to depreciate all of those startup expenses, and there are actual very strict rules on this. So this is another thing you'd want to talk to an attorney about. But you depreciate those startup expenses, and they will allow you. Last I checked, they will allow you to deduct up to $5,000 in the first year of those depreciated expenses. So does that make sense? When you depreciate, you have multiple years that you claim a little bit of each of those things. They'll let you claim up to $5,000 for all of those depreciable assets. Hope that made sense. But this is a big one because when you're getting started, like you're just bleeding money. And if you can write some of it off, then more power to you. Okay, summary in a nutshell, what did we learn, right? Everything that you try to expense, whether it's a current or capital expense, must be business related, right? Must have something to do with your rental property. It has to be a fix, or if it is a fix, then you can expense 100% of the cost. So short-term value, like just get the water heater running again, like don't replace it, just fix it, right? Then you can expense all of that. If it's an improvement, it adds value or adds life to something, then you have to depreciate it over multiple years. There's the number of years it differs depending on what you're doing. But use Cozy to track expenses because it's super easy, and we're going to show you that in a minute. And then if you want to try to do your taxes yourself, go get TurboTax Home and Business. I'm not a liaison for TurboTax. I've used it in my own life. It's awesome and has made my job a whole lot easier and has saved me thousands of dollars in working with a tax attorney. Over 11 years, I've never been audited, and I have 5 properties and pay very little in taxes because of all of the expenses we discussed today. And then when in doubt, ask a professional. I am a professional landlord. I'm not a professional lawyer, tax advisor, or CPA. So make sure that you can talk to somebody in your county who can help you with this. So it's always better to get advice because it really stinks if you have to file a modified return later on. And sometimes the IRS will come at you for the lost funds or the interest on that, which stinks. So let's dive into a demo real quick. So I want to show you some things here. So when you log into Cozy, when you first log into Cozy, you'll be prompted to, you'll have a properties field. So if you already have properties in here, you'll see some pictures. These are some of my properties here under a demo account. And there's a little tab on the left-hand side that's called expenses. And in here, I currently have 3 expenses that I've listed, but I want to add a new one. So let's just say I go over to Lowe's and I pick up a new, I don't know, let's say I did it today. I pick up a new doorknob for $100, right? And it's at that property. And then we're going to call that a supplies. It's a doorknob. And I can say doorknob. And then I can hit save. I can also add a receipt, which I didn't have one set, but you can go and grab any sort of PDF, let's say this one, and it puts it in there. So hit save, and the expense is created. Voila, there it is. So what happens here is I can search by anything, like if I type in Lowe's, it's gonna pull up anything matching that, or if I type in doorknob, right? If I had multiple doorknob repairs, it would show up. This is really helpful if you're looking for something common like lawn care. And I can search by property, I can search by category, I can filter this all out. So that's great, and it makes it really easy to kind of figure out what you've done. I can always go back and look at it again or edit it. I can pull that open, see what the receipt looks like, edit this, delete it, whatever I need to. Well, the beauty of this is that it tracks everything in one location, right? So it gets into the system. I can do this on my phone, so it's really that easy. Like I've been able to go into Lowe's, walk out, sit in my car, take a picture of the receipt with my phone, and then it's done. Like I can throw that receipt away. I don't have to store anything in a shoebox or a file cabinet. I'm just done. So it's a central location for you to store your expenses easily, and then when it's time to do your taxes, you can get that information out really quickly, really easily in a very simple format. So let me show you what that looks like. So here, if you're in Cozy, you've been entering in all your expenses all year long, that's great. It's a relief. You can check them anytime you want on your phone, and you can export that data. So in Cozy, currently we have 2 forms of exporting. We have exporting payments, which is also known as income, and we also have exporting expenses. So you can go in here and you can pick a calendar year. Let's say show me everything from 2017, or hey, just show me something from the last 45 days. Like you can do that too. And then you pick the properties you want, and then you can even say, hey, I've uploaded like 300 images of receipts, and now my accountant is wanting to see those receipts. So if you check this box, we'll even include a zip file for you with all of those images and how to reference those easily with each transaction. So I'm not going to do this because it takes a second to, especially if it's heavy, but and the bandwidth with the webinar and everything just gets a little nuts. But it gives you a spreadsheet, gives you simplified data that you can actually open up in Excel, and then you can format or filter, do whatever you want there too. So super easy. My favorite part though is this little document. So it also gives you a summary based on whatever you decided to export, and it'll say, here's the property address, and then here are the dates you asked for, and it gives you all of these categories. And while I've got that up, IRS Schedule E, let's just pull this up. So if you are a landlord and you've ever had to fill out a Schedule E, which is just part of your 1040 tax return, they're going to ask you a couple of questions. And you are responsible for entering in the rent you received. Here, let's make this bigger so everyone can see. The rent you received, this is the IRS form you fill out and send in. The advertising expenses, the auto travel expenses, cleaning and maintenance, and insurance. And lo and behold, what you get from Cozy is you get this exact same form. So it's literally just saying, oh, $340 for advertising. Let me just add that into this box, right? $340, right? So if you're doing it by hand or by computer, you can do that right here. It's super easy. But if you also use a tool like TurboTax, you can just, it's just a matter of transcribing the data. And then if you have an accountant do it, you can just print out this document, which is really the only thing they need, unless they want to see the receipts. But, print this out and hand it to them and be like, hey, you're welcome. I did your work for you. And then it's that simple. So, and then it gives you a nice summary of what you've spent on current expenses. And so I will say that there is an other category here, but these are designed to be current expenses. So in Cozy, we are actually working on, and depreciation and such. We're working on creating a separate category for capital expenses. So if you want a more detailed view of like, here are all my capital expenses, which I'm not going to depreciate, or which I'm going to not expense this year, but depreciate later, then you'll have that too. So that's coming in the next couple weeks here at Cozy. This report will get longer and a little more detailed. All right, moving on. One other thing I wanted to point out here is if you are using Cozy in other ways besides expenses, I highly recommend you check out maintenance tracking, because here's an example of my maintenance requests. I have one here that I wanted to show you. It is anonymized, so it probably doesn't make a lot of sense. But Bethany, started this. We had a discussion back and forth, and eventually I fixed the problem, and I had an expense related to that. So instead of me trying to document let's say it's pest control, the $99 I spent on pest control, I actually can just click this one button, and it starts to generate an expense for this. So it doesn't know who the vendor is. I'm going to say it's Pest Now, and then the date, right? But you'll see that it's already got the property selected, and it's got the repair category, selected because it's coming from a maintenance request, so it's probably going to be a repair. And if there was some sort of title to that maintenance request, it's already put in there. If you have, let's say, if I hired a pest control guy to do 2 properties because they were right next to each other and he just did them both at the same time, I could actually say, okay, I'm going to split this receipt. I'm going to click on that link, and then it's going to let me say, oh, okay, well, $99 is the total bill, but maybe it was only $50, because I split it over 2 properties. $50 goes to Shania Trace, and then the other $49 goes to this property. So that makes it really easy for me to designate joint receipts to different properties, and then I can hit save, and sure enough, it created 2 Pest Now expenses, 1 for each property. So it'll show up depending on how you export it. So that's it for the demo. Cozy does so much more. You can see here we've got payments and listings and applications and screening, but that's a whole different discussion. If you want to see those in detail, sign up for Cozy and join, look through the FAQs or join Maggie's Q&A demo that she does once or twice a week now, and it's really fantastic. So let's see, moving forward. Yep, we looked at that. All right, so I wanted to show you one last thing here. So I did include some downloadable extras, and what I have here is if you look in the bottom right-hand corner of your GoToWebinar control panel, on the right-hand side, you'll see something down there that says handouts. You'll see a list of helpful links. Now, what that looks like is this. So I put together just a quick link list because I was flying through some things and it didn't even show you the IRS documents, but I did list them here. So download this link, right click on that little PDF icon or the link, and then save it to your computer, and you'll have everything we talked about today. There's also an expense summary, and then right now, I'm sorry, that expense summary is this document, so you can see that in more detail. And then I am actually going to, let's see, I'm going to upload the expense tracking webinar. So this presentation that we just gave, I'm uploading right now. So all of those slides that I just listed, you'll have. So it should show up right now. Check that bottom right-hand corner of handouts. Should say 3 of 5, and that's it. So again, we just recorded this. It will be available in 24 hours, and you will get an email. So now let's move on to questions. I know that they've been rolling in, so I will do my best to answer them in the order that they're received. Maggie and Jordan here are going to feed questions and answer those. And again, I am not a lawyer, and this is not legal advice.
All right, awesome job, Lucas. We do have a lot of great questions, and we try to categorize them into groups so we can answer a ton of questions at once.
Okay.
The first one we got right off the bat was about capital expenses versus current expenses. We had some specific questions asked, but if you can go over the guidelines on how to break those down, I think that would be really helpful.
Okay, cool. So let's go back to one of those slides. I think that'll be helpful. Do you know who that was from?
It was from several people.
Oh, cool.
Yeah.
Joint question. All right. So essentially, just remember this. There's a lot to it, and there is a bunch of documents in the IRS on the IRS website. So the IRS website is actually very, very, very helpful. So yay, go government. But sorry, these are loading incredibly slow because I'm taking up so much bandwidth with the webinar. But essentially, current expenses are anything that provide a short-term benefit that fixes something to its original state. So I'm not talking about restoration of a giant antique armoire. I'm talking about like restoration of a drippy faucet or a water heater that no longer heats water, right? Like you're fixing the problem and you're not replacing it, you're fixing it, and it immediately has a benefit. Now, capital expense is something that has a longer term benefit, like I'm gonna put in a pool so I can get more rent, right? Like that's a long-term benefit that you have to depreciate over multiple years, or you replace a whole roof. So just remember, there's no set dollar amount that defines the two, but if it has lasting long-term value and it is a bigger thing, or you're replacing an entire set of windows or a water heater or an appliance, if you're replacing, it's probably a capital expense. If you're just fixing the same device and you're replacing a part, then that's usually a current expense. I hope that helps. That's probably the simplest way I can say it.
All right, thank you. Next question we got was for clarification on what you can deduct. We had a few specific examples, but people would give examples of like a specific item they bought or like a washing machine.
Sure.
Can you give kind of like the breakdown of how to think about it? And of course, you want to check with your tax professional, but an overview would be helpful.
List. So list of things that are current expenses. Is that what you're asking?
Yes, about what you can deduct.
Okay.
Yeah.
So yes. So here's a good one. So I guess I don't know how to answer that because that's kind of the whole presentation. So in here we get 15 examples of different things that are most of them are immediately deductible. Oftentimes, taxes, repairs, anything that you are actually fixing something. I don't care if it's a wall, I don't care if it's a faucet, if you're fixing a floor, that can be a repair. If you're replacing the floor, then that's a improvement, and that's something you have to deduct. HOA fees, light bulbs, smoke detector batteries, insurance premiums, those are all things that you can expense.
Awesome. So it sounds like the list is in the presentation you shared.
Just download the presentation.
Awesome.
Yep.
All right. Here's an interesting one we got from a few people.
Okay.
Can you deduct labor costs if you do the repairs yourself?
Oh, good one.
Yeah.
No. So in 99% of the time, or percent of the cases, you cannot deduct your own labor costs. The reason is that you are typically not a skilled professional, and that is typically not your trade. So let me give some examples. Let's say you fix the sink, right? The sink is dripping, it's running. You get in there, you look up some tutorials online or on YouTube, and you figure out how to fix the sink, right? But it costs you like 3 hours of your time and maybe about 20 bucks in parts, and that's great, amazing. You fixed it for 20 bucks, but it might take a real plumber maybe like 10 minutes, and that's his trade, right? So he's a professional at it. And your 3 hours may not, maybe equal his 10 minutes. So, the short answer is no, because you're typically not a professional, and you don't charge for these items typically. You're not doing it for other people, and you really didn't have an expense. Like you didn't have a receipt to go with it, right? Like you didn't send an invoice to yourself and then you paid yourself for the job, right? So you don't have a way to prove it. You just have an arbitrary number that you spent some time on it. Well, who's to say your time is more valuable than that plumber's time, and it would take the plumber the same thing. So it gets a little tricky. As I mentioned, the only real time you can do that is if you are a licensed plumber, you do have a job list or a price list that you do charge other people, and you decide to fix your own property, and therefore it's your time, you know what your time's worth, and you can prove it. So I hope that helps.
Yeah. Next question is, what do you do about items that are also used for personal use? So like a car or cell phone that you use for your personal stuff that you also use when you maintain your rentals? That's
a great question. So you can't mix personal and business, but in real life, we only have one cell phone. We don't carry around 2 cell phones, or we don't buy 2 vehicles. We have just one that we use for both. So the proper way to do that is to figure out, let's say the cell phone, figure out how many of those calls or how many minutes or what's the percentage of time that you use that cell phone for business. If it's 10% of the calls were business related, then you can deduct 10% of the bill. If it's 50%, then great, deduct 50% of the bill. For vehicles, it's a little more complicated because there's maintenance and tire usage and gas and all this other stuff. So that's where the mileage comes into play. So if you are using a vehicle for personal and business use, make sure that you track the mileage for the business use. So every time you go to the property, just take a note, like, hey, I traveled 20 miles today. Write down the date. You can do that in Cozy. You can just write down the date, use the other block for the cost and or for the mileage, and you can track it that way too. So add all that up. I know a lot of people who don't even bother to track it each time, but what they do is they say, oh, I went to my property like maybe about a dozen times, and it's 30 miles away, so that's 60 miles round trip times a dozen, like that's my mileage, right? And you probably won't get audited for it. I don't know for sure. If you do get audited, they might make you remove that because you don't have a documented travel log, but you can take the risk, I suppose. Hope that answers the question.
All right. We had a few people ask about vacation rental management fees, so Airbnb management fees. Can you deduct those?
Yep. Those are technically advertising costs. So Airbnb takes a fee every time you have a listing and that you get a tenant that pays money for it. So sure, that's the cost of doing business. You wouldn't have paid Airbnb otherwise, right? You're not going to pay them unless you actually are running your business. So it's a real business expense for sure.
All right. We have a few folks ask about, do you really have to keep and itemize all receipts?
You don't have to do anything. But if you get audited, the auditors are going to want to see a documented history of receipts. And I've even heard of, if you track them well enough in a spreadsheet or in Cozy, and you just print out that export, they don't even bother with the receipts, right? Like if they see that you're on the ball and you are tracking this well enough, they're not going to really want to go through a shoebox of receipts. But if you what I do and why I use Cozy is that I can actually get rid of my receipts. So I take a picture with my phone. It's in Cozy. If I need it, I can download those images and basically hand a single file off to the auditors or my tax attorney and just even email it to them and say, here are all the receipts, like have fun, right? And I'm done. I don't have to actually keep physical copies of it. But it's a best practice to have some sort of copy of the receipt just in case you do get audited. Even if you never look at those again, they're there just in case.
All right, and that kind of segues into our next question. Does Cozy have a mobile app?
Cozy, we're working on a mobile app, but the point is that you actually don't need one to use Cozy. So Cozy is completely mobile friendly. It is accessible via any mobile device, whether it's an iPad, an Android, an iPhone. Just go to the normal URL that you get in your emails, from your emails from Cozy, or just go to home.cozy.co or cozy.co and sign in. And everything is mobile accessible. So you can do everything on your phone that you can do on your laptop, and you can take pictures of those receipts and everything. So we're working on making that actually something you download from the store, from the App Store, but you don't need it. So you can even save that web page to your home device or your home screen by just bookmarking it, and it's always there. So hope that's good enough.
All right. So you mentioned TurboTax.
Yeah.
Do you have any other tools that you recommend that are go-to for either accounting or other business tools that you use?
Sure. Depends on the level of your business. So if you're just tracking rental income and expenses, then Cozy will do that for you, and that's free. For tax preparation, Cozy provides you the data in a simple format, but it's not going to do your taxes for you. That's where TurboTax comes in. Any of the tax softwares out there are decent, but if you have rental properties and you have a full-time job, you're going to have a tax situation that is like more complicated than the majority of Americans. So you want to make sure that you get a tried and true software to help you with that. And that's why I like TurboTax Home and Business. That is like their top tier software. So they have 5 different versions, and that's the most expensive and the most complete because my situation demands it. But you could also just pay a tax advisor to do your taxes for you, and they'll charge you a couple $100 more than TurboTax will. But hey, you don't have to do it yourself. I can't recommend any others online because I haven't really used any others besides TurboTax. But I think there's another one called Tax Slayer. If you have a rental property, you're not going to qualify for any of the free versions. It's just not going to be enough for you. So hope that helps. If you're doing accounting too and you have a full property management business that you're trying to manage, then QuickBooks is a great one to manage a lot of like employment salaries and other business related expenses that aren't property expenses.
All right. Thanks. So someone else asked, and it's such a good follow-up.
Yeah.
Do you offer any integrations with these accounting tools, or how do you walk through your process, taking it from Cozy and putting it into TurboTax?
Yep. So great question. So there are so many softwares out there with all different unique proprietary formats that they want that we don't have, we don't export out to a QuickBooks file. But what we do is that we let you export it to a CSV or a spreadsheet file, which will oftentimes be completely acceptable to just upload into your other software. And then you can choose, what the data headers are and how you want it to kind of come in. And that's pretty seamless. That works with a lot of tools out there. I know TurboTax doesn't have an importing system for CSVs, but honestly, if you have that summary document that I showed you earlier, this is all you need to do your taxes. I mean, that's all they ask for. That's it. So, it's all right there anyway. Great question.
All right. And now we have a few questions about Cozy's expense tracking feature specifically.
Cool.
Can you set up recurring expenses in Cozy?
Good question. I wish. No, the answer is no, not yet. So this tool is actually fairly new. We launched it in October of 2017, and we've just finished our first round of feedback from customers. It is being used heavily, and we've gotten some really good feedback. And one of the things that they've mentioned is, I want to set up recurring expenses like, when Andy's Lawn Care shows up once a month, and I know it's going to be $79 a month. I just want to put it in once and forget about it. So we're looking into that and seeing how we can do that. We also want to make it incredibly simple. So that's kind of the motto of Cozy, is to take these complex things and make them simple. So whenever we do release something, it's going to be solid, and we're looking at other ways to improve it. So besides recurring expenses, if anyone on the line has suggestions on how to make expense tracking better in Cozy, just go ahead and throw that in the question box and we will take note. So that's a great question and feedback. Thank you.
Yeah, here's another question. How long do you have access to the information that you've entered in Cozy, both expense tracking or even payment information?
Yeah, forever. So I should say that's forever as long as you don't close your Cozy account. So if you leave and delete your account, then the data gets deleted too. But I think we do hold it for a little bit of time. But as long as you're an active Cozy user, or you just have an account and it's not closed, and we'll never close it on your behalf, you can just log in and get it whenever you want. So that's it.
All right. We've had a couple questions about what services in Cozy are free and what are paid. Some people have wondered if the expense tracking is a premium feature they have to upgrade to.
No, it's not a premium feature. So let's just dive into that. So this is the Cozy website, and there's a little link at the very bottom that says features and pricing. So there's 2 tabs for landlords and renters, and if you scroll down, you'll see a table of all the things that you get as a landlord that are free. And so I mentioned that the core services will always be free, and that's what's listed here. So tenant screening, credit reports, background checks, rent collection, like online rent transactions that process, all that. There's no transaction fees at all with Cozy, which is more than I can say for most of the other competitors. Listings are free, applications are free, all that's going to be there. Where we do make money is that we charge for a couple of things. The credit reports and background checks are not free for the tenant. So you don't have to pay for it, but your tenant has to pay for it. And most of our customers, most of our landlords just call that the application fee, right? I mean, the tenant pays for it. They actually get a copy of both of those reports at the exact same time you do. So they receive something in return for their money, and they love it. We rarely have anybody come back and say, oh, I want a refund because I didn't get the place or whatever. That's usually it. But they get a report. We also have something called a rent estimate report, which goes into actually helping you analyze your property and deciding how much rent you should charge, which is awesome because I found out that I was actually undercharging for rent after I looked at this. So I'll show you an example. You can buy this in Cozy as a landlord. It is $19.99, and it's just a report based on all the other comparables in your area, in your neighborhood, for people who are actually getting real rent money, and it'll tell you what we think that you should be charging. And so hopefully that's a lot higher than what you're charging, and you can actually raise your rent and the market will sustain it. Lastly, we do charge for 2 things. We do charge for express payouts. So when you collect rent for free, it takes 5 days. Let me go back here. There it is. It does take 5 days to process. That's 5 business days, and that uses the ACH system, which is the bank-to-bank transfer system that the federal government moderates and regulates. Now, it's free, so it's just the slowest method. But if you want to pay $2.99 per unit, not per transaction, but per unit that you are collecting rent on, then you can speed that up to 2 to 3 days. So if you want that, then you can pay for that. But you don't need it. It's free otherwise, and free for both parties. And then lastly, credit cards. Yeah, cards. So if your tenant pays with the rent with a credit card or pays for anything with a credit card, they have to pay 2.75% of the dollar amount, which is honestly just what Visa and MasterCard is charging. I mean, essentially. And so we weren't able to convince them to make that free. So that's why that's there. But they can pay with a bank account for free. All right, good question. All right. Thanks for asking.
So I do want to just take a note of time. How many questions do you want to take, Lucas?
Let's do 3 more. It is 5:11 Pacific time. So if anybody needs to hop off, thank you so much for attending. But we're going to keep answering questions because we had so many come in, and I want to honor those. So let's do 3 more.
Yeah. Is there a way to track mileage or profit and loss in Cozy? So I guess those are 2 separate questions.
Yeah, but talking about a P&L statement, so a profit and loss statement. Essentially, I'll just give a little recap. When you have income, that's profit, or that's not profit, that's income, and then you figure out profit based on expenses. So in Cozy, we track income through rent, and we track now we track expenses. And so expense tracking just came out in October. We're working on building a very simple P&L statement or profit and loss statement that you can just do like one click, like here it is, right? And so we can compare that data and tell you what your profit is. Now, in order to have that P&L statement, you actually have to use expense tracking in Cozy because we have to know what your expenses are. But it's coming. We're working on building some really advanced reporting tools to make that super easy. But in the meantime, you can just compare them, you know, with the exports, with the data we give you.
All right. So here's a question we've got a couple times.
Sure.
If you're using Cozy for rent collection, can you track checks or payments received outside of Cozy into Cozy?
Yeah, absolutely. So let's go back here. And if I look at payments, I'll show you, I have a couple leases here, and I click on the ledger or look at all the transactions for that property. You can record offline payments. So the scenario is a tenant shows up and says, hey, here's a check. I know you want me to pay through Cozy, but like, here's the extra money I owe you. You can just add that credit or add that offline bill. I'm sorry, not the credit, but the offline payment. So it's as simple as that. Like they paid it offline or they paid it through a different mechanism and you just want to record it. And you can just say, this is like extra rent for January. And then the amount was like $200 and it was, you know, then, and I can record that offline payment and it will show up in the ledger. So it says, congratulations, it was recorded, and it shows up in here. So that way it records the income even if we didn't process it electronically. Cool.
All right.
Yeah.
And here's a great question to end on. What are some new features or updates coming to Cozy?
You want the secret sauce, don't you? So we tend to try to build the things that everyone asks for. So we're looking into actually converting it to a mobile app, so it's something that gives you that warm fuzzy when you download it, even though all of it's still already accessible. We're doing advanced reporting, you know, things like P&L statements or rolling 12-month statements or rent rolls, things like that, where you just want those simple reports and you might use them a lot. We're also doing some really cool things without giving away too much of the goods. We're looking at uploading and sharing leases and other documents with your tenants. So if you just wanted to, you know, you create a lease, you want to set up online rent payments, and you want to just share that document with them, that's really simple. And then amidst that, you also would be able to purchase a lease if you wanted a new lease, and we'd help you work through that. It's a legal lease, state specific, and then the icing on the cake is that you could upload a document and then actually sign it. So you could digitally sign those documents with your tenants and not have to worry about, you know, meeting up and getting a physical signature, or even paying for something like DocuSign where it's like 15 to 20 bucks a month, and you could do it in Cozy for free or very inexpensively. So we're working through that, and that's what's in the hopper for 2018, the first couple quarters. So good question.
All right. And that's it.
Okay. Well, hey, thank you so much. I know we're 15 minutes over, but I appreciate everyone who's stuck on and everyone who's here. Again, this is recorded. We will send this out within 24 hours. So feel free to share the link and tell your friends about it and try Cozy. And if you do sign up for Cozy tonight as a result of this webinar, just send me an email. My email is lucas@cozy.co, and I'd love to hear about it and celebrate with you. So that's it. Thanks, everyone. Bye.